Hey guys, how's it going? Yasir Khan here, and in this video I will be talking about something which is generally not known by the public, and that is about how the banking system really works. And this is pretty much applicable to, it's applicable to any country around the world for the most part. So it doesn't really matter where you are watching this video, it applies to you. Okay, so the first thing to understand is that the banks are not in the business of printing or dealing with money. Okay, they are in the business of printing currency. There's a big difference between the two. Okay, in fact, there is nothing common between money and currency. Currency can be printed by the millions or even billions every single month, okay, or every single day. But money is money. It has value, and for that reason you cannot print more of it. The only way you can earn more money, genuinely speaking, is by increasing your output or providing more people with more value, right? Currency, on the other hand, is a totally different game. You can print, by you I mean the central bank and all the other banks in the country, or even globally around the world. Banks can print as much currency as they want, which is why you have probably noticed that over the last 10 years, the price of food or bottled water or cars, guitars, anything, musical instruments, pretty much anything that you can think of has gone up. It's not because those things are pricier now. That's not the case. They've gone up in price because the currency which you use to buy these things has gone down. Okay, I hope that makes sense. And the currency has gone down because the banking system keeps printing millions and billions of currency and new currency every single month. Okay, so this is the first thing to understand. No one seems to be talking about it, and I don't know why that is the case, but it is called quantitative easing. This is where the bank is using difficult words to say that we are printing currency. And we will keep printing it because that's one of the only tools that the banking sector has. They can either print more currency, they can increase the interest rate, which is going to make it difficult for people to borrow money. Okay, they can decrease the interest rate, which is going to make it easier for people to borrow money. And I think these are the only two or three ways that they can control the economy. All right. So once again, the banks are in the business of printing currency, not money, because real money cannot be printed, otherwise it would not be money. Okay. The second thing to understand is that banks are in the business of lending out money. That is pretty straightforward, of course, but what most people don't realize is that banks are lending out currency that they have printed out of thin air. Okay, there's nothing backing that currency. Okay, it is as if you write something on a piece of paper and give it out to someone else. This is how technically the value is created in the banking system. Now, generally speaking, most of the money that the bank loans out, most of the currency, I don't know why I keep confusing money with currency. They're totally different things. So most of the currency that the bank prints, is loaned out to huge businesses, multi-billion-dollar corporations, and they use that currency to either create offshore operations, hire more people, expand their operations, expand the company, buy more companies, all that stuff. Okay, which means that if you don't understand how the game is played, the odds are stacked against you. They're not in your favor. See, a lot of people, in fact, most people they think that saving money in the bank is a good idea. I personally don't think that's a good idea because, first of all, it's not money, it's currency. And secondly, when you save money in the bank, and let's assume you get a little bit of interest out of it, that currency goes to someone who knows how to multiply it. So even though you might be getting 2% interest per year, the person who you loan out, who the bank loans your currency out to, is probably getting a 200 to a 500% return every single year. Okay, and for the 2% interest that you get every year, you can be pretty sure that the inflation in your economy, in your country, is higher than 2%, which means that you're not making money, you're losing money. Please understand that saving money is usually a pretty bad idea because of the reasons I mentioned. Also, when you get interest, you earn interest on your investments, it is treated as earned income, and then you pay a lot of tax on it. Okay, so how do you use the banks in your favor? Well, you borrow money from the bank and use it to buy an investment. Banks usually will not give you money to buy stocks, or well, they'll give you money, they'll give you currency to start a new business. That's fine, but the interest rate attached to that will be pretty high because it's risky for them, right? But if you use the bank's currency, not money, currency, to buy real estate, they will allow you to do that. The only difference is, instead of buying a huge house for yourself, which is a liability because it takes money out of your pocket, you buy an investment property and then you rent it out for cash flow, for positive income. Okay? The biggest takeaway from this video should be to understand that, first of all, banks, especially the central banks, are printing millions and billions of dollars. If you're in the US, of course it's going to be in dollars. If you're in Pakistan, it's going to be in Pakistani rupees. If you're in India, Indian rupees. But they are definitely printing it. That's why the price of things keeps going up, and people always wonder, well, why is the price increasing? Well, the price is not increasing because the goods have increased, are pricier. That's not the reason. The reason is that your currency is losing value, and every single currency in the history of time has lost its value, and the value has gone down to zero, which is why you can be absolutely sure that your currency, no matter where you are sitting in the world, your currency will go down to zero, and then a new currency will be introduced. This is just how things go, because you are not using money anymore, you're using currency. There's a big difference between the two. Okay, and a big part of this game is to understand how to use the bank's currency. I'm not going to say money because it's not money. How to use the bank's currency to increase your net worth, right? I hope this video helps. I'm sorry if you were expecting me to go into the technical details. I don't go into those because it confuses people and it kind of takes away from the gist of what I'm trying to mention. But at the bottom of this video, there's a link where you can sign up for my free course, and it's going to give you more of an idea as to what is really going on and how to use strategies which are going to increase your net worth and allow you to retire much faster. Okay, so thank you so much, and I will see you in another video. Take care.